This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill, markets move fast, and if you're not ahead, you're under. It is Tuesday, June 30th, 2026. It is officially the last trading day of Q2, and institutional portfolio managers are staring at the most brutal quarterly rebalancing of their careers. The paper illusions have completely burned away over the last 90 days. If you are holding cash-settled futures instead of physical hard assets going into Q3, you are standing on the tracks. Let's get you caught up for the global open. First up, the 60-second commodities flash. Silver eyes $90 on COMEX abandonment. The OTC singularity we warned you about yesterday is accelerating. Spot silver is violently trading near $88.50 per ounce. Industrial tech buyers have completely stopped participating in the COMEX, opting instead to sign direct purchase agreements with miners at massive premiums just to guarantee physical delivery. Meanwhile, look at Brent's floating parking lot. Brent Crude is pushing $96.10 a barrel. The African bunker fuel squeeze has mutated into a full-blown maritime crisis. Hundreds of very large crude carriers are now idling off the coast of South Africa, waiting for fuel. This stranded inventory is actively draining the onshore global oil float. Copper enters historic backwardation. LME copper just breached the massive $15,100 per ton psychological barrier. The cash to 3-month spread has blown out to historic levels. Manufacturing entities are willing to pay astronomical cash premiums to secure copper today because they do not believe it will be available in September. Finally, fertilizer panic hits the tape. Following yesterday's UN emergency session on rice, the agricultural panic has shifted to inputs. Natural gas and crude price spikes have sent global urea and phosphate fertilizer prices up 14% overnight. Sovereigns are now hoarding fertilizer just as aggressively as they are hoarding grain. Let us take a deep dive into why the paper exchanges have officially become ghost towns. How the energy crisis guarantees an agricultural disaster in Q3. The data hitting global terminals this morning is a testament to the physical super cycle. When systemic supply chains break, algorithms break with them. We are witnessing the death of paper price discovery in real time. Look at the volume data on the COMEX this morning. Speculative paper trading is evaporating, while OTC physical transaction volumes are going parabolic. An AI data center builder or a Tier 1 solar panel manufacturer needs physical atoms. The extreme backwardation and massive premiums indicate absolute desperation. The industrial sector realizes the vaults are functionally empty, and they are panic buying the remaining float. The exchanges have lost control. This brings us to the African floating parking lot. Yesterday, we reported on the localized bunker fuel shortage. Today, it is a global logistical paralysis. Tankers rerouted away from the Middle East are now stacked up like a floating parking lot. Millions of barrels of crude are stuck on the water, moving at a crawl. This effectively removes that oil from the global market for weeks. Brent at $96.10 is not pricing in a surge in demand. It is pricing in the terrifying reality that the oil simply cannot reach refineries. At the same time, prepare for the fertilizer feedback loop. If you want to know what Q3 looks like, look at the fertilizer tape today. The agricultural market is trapped in a deadly feedback loop. The maritime energy crisis has spiked the cost of crude and natural gas, the foundational building blocks for modern fertilizers. Urea and phosphate prices are surging 14% overnight. Emerging market farmers are being priced out of the upcoming planting season. This guarantees that crop yields for late 2026 and early 2027 will be severely compromised. The Asian rice export bans were just the opening act. Food protectionism is about to become the dominant geopolitical theme of the second half of the year. Here is the TradeFlow take. Congratulations on surviving one of the most volatile quarters in modern financial history. As we transition into Q3, the playbook is clear. Paper promises are worthless. Maintain your unyielding grip on physical tech metal miners in silver and copper. Ride the maritime-induced energy floor and aggressively deploy capital into domestic producers. Stay liquid, stay sharp, have a great quarter-end session, and we will see you in Q3.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.